Good afternoon, everybody. My name is Chris Konetsky, President at Business Publications Corporation, which publishes the Business Record. Our goal at BPC is to help you conduct business more effectively. You are the reason we strive for the excellence that we provide throughout all of our programming, and this series aims to achieve that. We're very excited to welcome to our first Project 515 of 2025, which is brought to you today by our presenting sponsor, Midwest One Bank, and our supporting sponsor, Iowa Finance Authority. The Project 515 virtual event series is going to explore three key areas of real estate and development: retail, which we're talking about today, office later on in the year, and then, of course, housing to wrap us up. Each event is going to spotlight emerging trends and challenges. It will feature insights from stakeholders, including industry professionals and leaders who depend on a strong real estate market to help make Des Moines grow and thrive. In order to bring programming like this, we need sponsors and supporting sponsors to help power today's program. Our presenting sponsor today, I'd like to welcome Midwest One Bank. We want to take a moment to thank Devin Boyer from the Central Iowa Market, who's the Central Iowa Market president. He's going to provide a brief video here to tell you a little bit more about Midwest One.
Hello, I'm Devin Boyer, Market President at Midwest One Bank, and we are honored to be the presenting sponsor of the Business Records Project 515 series with a focus on real estate and development. At Midwest One, our mission is simple: taking care of our customers and those who should be. That means being a true partner in building strong communities where we live and work. Real estate and development drive growth, create opportunities, and shape the future of our community. We know that strong financial partnerships are the key to making these projects a reality, and we're committed to supporting the businesses, developers, and families every step of the way. Project 515 provides great insight, perspective, and a platform to explore these topics. We're proud to be part of this important conversation, excited for the ideas and connections that will come from today. Thank you for being here, and please enjoy the event.
Big thank you to Devin and Midwest One for their presenting sponsorship again this year, helping make this program possible. We'd also like to thank the Iowa Finance Authority for being a supporting sponsor today. Iowa Finance Authority connects Iowans with affordable housing financing options for mortgages, rental properties, and starting a farm, helping them enhance their quality of life and achieve their dreams. Pleased to welcome Ashley Jarrett, who's the communications director of the Iowa Finance Authority. She's a friend of the Business Record and doing great work. So Ashley, welcome.
Well, hello, everyone. First of all, I think Devin has it figured out with the video. You guys get me live and unfiltered today. So happy to be here, happy to support the Project 515 series as always, and the fabulous Business Record team, of course. Just a little bit about the Iowa Finance Authority. Of course, we provide affordable financing for all things communities so that we can all thrive in our state. And a huge part of thriving in the state is this retail conversation that these great group of experts are about to have. So I'm just here to say that thank you to all of our experts for being on the panel. Thanks to the Business Record for putting it together. And we really look forward to the conversation today. Thank you.
Thanks again, Ashley. And we're always glad to have you live and unfiltered on the program too. So thanks for coming on today, and thanks for supporting Project 515. In a moment, we're going to introduce our panelists and ask a few questions to get things going. But you all have a role to play as well today in helping shape and guide the discussion. If you have questions, you can use the Q&A feature or the chat option. Our panelists will be monitoring that, as will Michael Crum, our moderator, to see if there's anything that they can respond to. They'll also be using that if they have any resources or links that they want to share as well. So feel free to chime in there. We might not be able to get to your question directly, but that does help us shape the discussion today. In addition, today, our moderator, Michael Crum, is here, and he's done the legwork to bring this group of panelists together. There's no shortage of topics for us to be talking about as it relates to retail, especially right now, of course, with the climate around trade and on exporting and importing. And so that is a key component of some of the things I'm sure we'll be discussing today. Sometimes retail, we're talking just about the landlord side of the equation. Today, we're also talking about the retail side of it as well. Here to kick things off is our commercial real estate reporter, Michael Crum. Michael, go ahead and take it away.
All right. Well, thank you, Chris. And we're very excited to get things going today with our panelists. So let's dive in. The Des Moines area has dozens of retail areas that draw residents and visitors alike, from malls and big box stores to strip centers and storefronts in high traffic areas. But with ongoing tariffs, supply chain disruptions, and interest rates and costs that remain high, the retail ecosystem is continuing to navigate some uncertainty. And this environment pressures businesses not only to adapt, but also to innovate and thrive. We've assembled a great group of leaders from a wide variety of retail backgrounds to give us a window into what the future holds for the retail sector and the ongoing effects of brick and mortar businesses from the growth of e-commerce. I'd like to introduce our panelists for today. We have Mike Draper, the owner of Raygun. We have Carolyn Harrelson, the strategy director for the Retail Coach. We have Aaron Hyde, Senior Vice President of JLL, Kara Kelso, the co-owner of Slow Down Coffee in the Highland Park neighborhood, and also a commercial real estate agent with NAI Iowa Realty. And to bring us home today, we have Peter Ralston, an associate professor and the director of the Ivy Supply Chain Forum at Iowa State University. Thank you all for joining us today for this Project 515 panel, and to the panelists for taking time to guide us through where the retail sector currently is and what we might expect to see in the coming months. Generally, retail includes the sales of goods and services to the public. For our discussion, it's going to be a little bit broader. We're going to include restaurants, bars, breweries, and coffee shops, for example, and how some of the issues that we're discussing may affect all of those. I'd like to begin our discussion with a question to all the panelists. Given your various backgrounds and areas of expertise, what opportunity do you see for the retail sector over the next year? Let's start with Mike Draper, if you want to kick us off today.
Oh yeah, opportunities. I mean, there's always going to be opportunity when there's like shifts for things, and so I think the shifts have been speeding up over time, and that we were just talking about it the other day, that you figured the mall was invented in the 50s, and it took 40 years until 1994 before the mall became a majority of retail. And then I think local neighborhoods, farmers markets, that type of stuff started taking off in the early 2000s. I first opened Raygun in 2005 in the East Village. And the building we moved into was the first mixed use building built in Des Moines in like 30 years, which is insane. There was this pause of mixed use construction. And that's when local breweries, local farmers markets, all that stuff took off. And so it's interesting that the 90s, people who grew up in a totally homogenized retail world where all we did was shop at the mall and buy national brands, when we kind of came of age as adults, we zagged and then moved downtown. We shopped at local stores. We went to local breweries. We went to farmers markets. And it's, as just the pace of things have sped up, I feel like things have shifted again, even though it's only been 20 years now. Where that's going, I can't say for sure, but I do think over the last few years, as AI has sped up and as the digital world has become homogenized, we think about the kids who are growing up nowadays, and it's like, oh, there's all this hyper connectivity. In my mind, it makes sense that there's going to be a zag in that, of anybody who has grown up in a fully digital, hyper connected world, when they come of age, is going to crave a less connected physical world. So I think physical stores will have like an advantage there, but it's always a matter of how many, like how big that swing is going to be. And there is no way to ignore the digital side of it too. At Raygun, our retail side is about 70% brick and mortar, and then the remainder is digital. So you have to do both at once, but that's probably what I think a little bit from the like big strategy.
Okay, and we'll dive into some more of those topics throughout our conversation. Let's move on to Carolyn. Carolyn, I'm interested from your perspective. What
Yeah,
opportunities are you seeing in retail over the coming year?
several things that Mike mentioned just kind of put some thoughts in my mind. One thing that I really think are going to be some opportunities in the retail sector, and we saw this in 2024, but I think we're going to continue to see it in 2025, just as Mike was saying, we and our children are growing up in this world where they're on devices all the time and they're looking for all these experiences. And I think that retail is really following with that trend. So we're seeing the trend of retailers needing experiential retail stores to open, where you can go in, you can try on a pair of shoes, and you can play a quick round of pickleball or whatever it is when you're trying on the shoes to see how they are. Dick has Dick's World of Sport, different things like that. And so I think that experiential retail, where it's more of a consumer experience instead of just your super traditional brick and mortar, is going to be more here to stay, so to speak. And then another thing is, I really think that can't remember, Mike, if you said this or not, but when we were growing up, we were always looking for those national retail brands. You were looking for that national brand presence, that name recognition. I really see in a lot of the client communities where we're working to recruit retail today, a retail market really needs a really healthy mix of local, regional, and national brands. And so I think communities and consumers more are looking for that mix of local users and the national brands too. And so I think that's more what consumers are desiring too in 2025.
All right, thank you very much.
Yeah.
Aaron, let's bring you into the conversation. What opportunities are you seeing, particularly when it comes to space, maybe for retailers, as we move ahead over the coming months?
First, I thought you were talking about Mars.
I think one of the biggest opportunities right now is, you hear about, oh, hey, Big Lots is closing this many stores, and Walgreens and Rite Aid, and on and on and on. And the opportunity that's been created is both for tenants and for landlords. Right now it's very expensive to build. So a lot of the junior box type, your TJ Maxx, your Ross, those type of tenants, now they can go in and fill those spots because they can't necessarily pay new construction prices, or they're not willing to yet in some markets, but now they can go in these second gen spaces. On top of that, that allows for that landlord who might have had that tenant in there for the last 15, 20 years at a depressed rent to bring rents up to a market rate. So it's a win-win for both those tenants and those landlords.
All right, very good. Kara, let's bring you into the conversation. As a small business owner, I'd like to have you kind of wear that hat for the conversation for right now. What opportunities are you seeing and hearing maybe from some other small business owners that you're in contact with? What opportunities are you seeing over the next year?
I think since COVID, things have really changed and people are focusing a lot more on what local businesses can I support, or what businesses align with my values. There's been a lot of stuff this year about not shopping on Amazon or not shopping at Target or whatever your values are. So we have really noticed, I think with our coffee shop, we were really focused on community development, having a place to meet other people, connect with other people, slow down, if you will. And I think people are really craving, and kind of what Caroline suggested, like an experience where they're not just going to a Starbucks just to get their coffee. They're looking to interact with people around. And, I think there's so many more business owners wanting to take a risk and open a space. But as others have mentioned, things are very expensive. So I think there is an opportunity for redevelopment in different neighborhood nodes in Des Moines, like what Highland Park has been doing. There's several others I think that could come online, and building owners have the opportunity to get creative and think, how can we make this space approachable, affordable for a different generation of businesses? So yeah.
Okay. And Peter, curious from your perspective and the work that you do at the university, what opportunities are you seeing in the retail sector moving forward?
Yeah, and I think first off, thanks for having me. I think we've had a lot of people touch on some of the differences in retail. If you have maybe a local or smaller provider, or you're more that national brand, the supply chains that support both of those retailers are going to be very different. And so the local retailers who maybe want to enter in a market, I think having a strong supply chain behind the scenes, and maybe that's a supply chain or a supplier that serves lots of small retailers, maybe nationally, having a strong supply chain partner can help them compete or secure that space where they can find an opportunity to survive and thrive against some of those national brands. And I think that's where we can maybe see some opportunities for those local retail outlets.
All right, let's move on to some other questions. I appreciate all of your answers and participation, and it really lays the groundwork for us to move forward. Peter, let's stick with you for a little bit. I want to delve more into the issue of tariffs and supply chain disruptions, maybe, and how are those affecting retailers? Can you address some of those for us today, please?
Yeah, it's a time of change. Supply chains, you know, they want certainty, and what we don't have right now is certainty, and that could come from tariffs, that can come from where we need to source goods, that can come from so many different aspects that affect supply chains. And so when we lack that certainty, that prevents companies and retailers from maybe creating a certain cost profile for what they might need to charge for an item that they want to sell. And when you have that uncertainty, companies don't always know how to respond. And so I think where we could get some benefit coming up, and maybe this will happen in the next couple months, just certainty around the costs of how our supply chains need to operate. And then that will filter through to the value proposition we offer customers. With tariffs themselves, you know, I don't necessarily know that they're going to go away. I wonder if maybe the actual tariff charge will come down and become a little bit more consistent across the board. And I think that can benefit consumers as we move through this time period.
Kara, I'm going to jump back to you right now. I brought this up in a previous conversation that we had, but you've been very transparent on social media with your customers about how your company, a Slowdown Coffee Company, is adjusting to and really trying to work through these uncertainties when it comes to tariffs and supply chain issues. Can you tell me how this is affecting you in a real world kind of level as a small business owner?
Yeah. Yeah, it's interesting. It's changing every day. And, you know, one of the last things a small business owner wants to do is raise their prices. It's painful for us to do. And, you know, we want our product to be accessible for all consumers. But, you know, coffee has gone up over 100% this last year. And that is one of the biggest things that have already changed with the tariffs. You know, obviously this last year wasn't a tariff situation, but you know, climate's changing, supply and demand is changing, you know, and all of our vendors are sending out notices saying tariffs are coming. They're adding like a line item saying that this is happening because they don't want it to seem like they're raising prices. But it's a reality, you know, and even outside of just the coffee product, everything else is going up too. I mean, even if it's not a product produced in another country like this coffee, packaging is a huge thing that everybody needs for their products, you know, so, or an ingredient for the product getting made here. There's so many things that come from overseas. It's not feasible sometimes to find a domestic alternative, which we have vendors who are working hard on doing that. So, yeah, it's interesting. And we like to be upfront with our guests and our customers because that's just how we like to do business. We like to be informed and transparent with them. So it's definitely changing on the daily. And we're grateful that we have a community in Des Moines who is willing to pay higher prices for a better product and a better experience.
And Mike, I'd like to bring you into the conversation to hear what your perspective is on how you as a small business owner are dealing with some of the tariff and supply chain issues.
Yeah, there's no real, you know, it's one of those things where it kind of like it is what it is. I think during COVID was when pricing got really out of whack. And it's always difficult to tell what's like actual price increases versus what's, you know, a company just wants to do. To put my like Marxist hat on, I think private equity jerks other companies around and then they say it's because costs are out of their control. My example for that is that when we looked at t-shirts, there were 5 different factories. Most of the factories, their prices went up by 10 to 20% during COVID. And one factory, their costs went up, their prices went up by 45%. And that was the only factory owned by a private equity company. So I think they made the calculation that they could raise prices more than they really could. But since there was competition in the marketplace, their prices have since dropped as they lost market share. I think when you look at rising prices in America, it's because there's a lack of capitalism. So that's like the big picture thing, and that we don't have enough competition in this country. We don't have a capitalist environment for most of what we sell. Clothing, we do. So clothing is hyper competitive. You haven't seen major price increases in clothing because most of us are just eating increased costs because of competition. So, you know, it kind of is what it is. I think when you're the entrepreneur, your job is to sell. So it's sell first, manage costs second. So you sell to stay alive, but then manage costs to increase take home pay. And as costs have gone up, you can't really, I don't know, there's not a whole lot you can do except just kind of like take it and, you know, wait for different macroeconomic policy to settle in. But that's going to take decades. So don't hold your breath.
Okay. All right. Mike, I appreciate it. Carolyn, I'm curious again from your perspective. What are you seeing and hearing from your city clients when it comes to challenges they're having attracting retailers to their communities?
Yeah, well, just from the tariff and just state of the economy perspective, I guess I should say. So as you know, we recruit retail to communities as an extension, usually of their economic development team or economic development efforts. And what I've heard most recently is, well, from a couple different perspectives. One, there are a couple of retailers who have locations outside of the United States that have been interested in opening their first location or first store. And in one example, it was even a food hall that was in the UK that was interested in locating in one of our client communities. And just with the uncertainty and tariffs and different things, those decisions, they've just slowed back and pulled back out of those decisions, and for a good reason. And then, you know, with some of the national brands also that we've spoken with that are considering locations in some of our client communities. Again, I was on a conversation recently or on a call recently with one of those national brands, and he said, it seems crazy to be talking about new locations with all of the uncertainty of how we're going to be sourcing our products moving forward and different things like that. So, you know, I think retail is still alive. I think they're still looking for new locations, but it definitely does affect different things. A couple of other factors that I think are affecting just new development in our client communities and in all communities across the United States is just the price of construction right now. The price of new development is definitely an issue. And so second generation vacant boxes, things like that are definitely where retailers are looking for. Second generation restaurants, or where restaurants are looking, just because of the cost of new construction. And so, you know, I think that retailers are smart when they go to the community's EDC office or their economic development office or economic development director, if they're really interested in new development or new build, and say, hey, is there any way that the city can help us out? Can you help with infrastructure? Are there incentives that can help even for small businesses? Are there small business incentives? Are there small business programs that may be eligible, we may be eligible for? So, you know, I think that there are definitely challenges and issues, but I think that cities are very, very open to bringing more retail into their community for sales tax and different things. And they're interested in finding solutions to overcome those challenges.
Aaron, some of the things that Carolyn just mentioned, I think cue us up well to bring you into the conversation when it comes to space. First of all, can you tell us here in the Des Moines Metro, what does the current occupancy rates look like for retail?
We're about 3.7% here in the Des Moines Metro, and that's on about 45 million square feet.
Okay. And what do you think the takeaways are? So if when you're dealing with potential users of space and those people looking for space, what are some of the takeaways when it comes to opportunities for retailers to either grow, expand, or to move around the market?
Well, I mean, the challenge is, while yes, you know, everyone talks about the tariffs and whatnot, it's a topic. You know, the reality too is sort of like I was saying with the junior boxes, right? These guys still want to grow, and it's hard to find good space. You know, I mentioned Des Moines is at 3.7%. Nationally, we're at about 4.1%. That's even with all this space coming back. So if you want a good corner, a good pad site, the challenge is even though your construction costs are going up, labor costs, et cetera, if you don't take that, somebody else is going to take that. We don't have all the big boxes and junior box power centers going up like we did in years past to create all these pad sites. So if you're coming into town with a Chick-fil-A deal or something of that nature, and you want the pad site, you're competing for it. And so we're seeing a lot of these pad guys, QSRs, auto related, they're out looking and they're looking hard to grow. So much so that they are now not just looking in the big markets, but the ones that especially are publicly traded, they're looking in the 30,000 pop markets too, because they got to keep growing to report to Wall Street.
Kara, I want you to change hats for us for a second and put on your commercial real estate agent hat. Continue this conversation when it comes to space. What are you seeing and hearing from people that you deal with?
Very similar things to what Caroline and Aaron have both said. I've worked with a lot of small business owners, and the vacancy rate is so low in Des Moines. It is really difficult to find small spaces, and as these guys know, like the smaller spaces usually often it's more expensive, but for restaurants in particular, it's very hard to find a second generation space. And the build out for it is huge. I mean, we have requirements from the WRA for the grease interceptor and things like that, and fire suppression. And I think a lot of people the small business owners in particular don't realize what they're getting themselves into. So the rent may be less, but there's still so much that goes into renovating a space. I think something that will help that the city of Des Moines is doing now is having a property maintenance code. I've been really happy about city council working on that. That's another cost that goes into, we have a lot of old buildings that haven't been taken care of, and then the cost is just extreme to bring them back up to code and what the city needs. So that's, I think, cost prohibitive for a lot of people. So a lot of education happening, and I don't know, it's just interesting seeing things change in Des Moines for the better.
Mike, Raygun's been actively expanding into other markets. I think one of the most recent places that I read about was in Madison, Wisconsin. As you've continued to kind of look into other markets and other communities to open, what are you seeing and what are some of the challenges you've had in finding space?
Yeah, we're gonna open in downtown Madison this fall, so right on State Street, just like east of the university. And then we're actually opening downtown Chicago, I think like next January. So we'll be 1 block south of Marshall Fields, 2 blocks west of the Bean. So literally at 00 at 1 State Street, where all the postal codes are drawn from. For us, what I kind of said before of this is the time when people are nervous about growth, what like Caroline pointed out, we take the Warren Buffett strategy of that's when we want to go as fast as possible. So we're trying to open and expand as much as we can while everybody else is frozen in place. I'm kind of like, oh, this is the perfect time to go. Like the bank wants to loan money because other people are not borrowing. So you're going to get great rates lending. You're going to get great rates on retail, depending on the retail. But it's like anything, you kind of have to select your city and then wait. So we look at 5 cities at the same time. We'll usually have a local real estate agent, and then we just have them tell us, we tell them what we're looking for. But we, are fairly flexible in that we can open in anything from as small as 1,200 square feet to as big as 7,000 square feet. And for us, it just depends on the cost. So if it's 5,000 a month is kind of our magic number. And you're like, well, if it's 5,000 a month, but right neighborhood and a small space, we'll squeeze in. If it's 5,000 a month and a bigger space, then we'll fill the bigger space. So I think it's hard to, shoehorn one strategy in if you're flexible. And we are, because we not only design all of our own stuff, print all of our own stuff, we build out all of our own stores. So we have a wood shop and a welding shop, and we make everything that we sell. So when we go into a space like in Madison, the only outside contractor we're going to hire is the electrician to do the lights. and then we go in and do everything else. So it means everything can be custom built, but it's all custom built by us, all filled by us. And that's, taken 20 years to get to this point. And all sorts of people told me along the way, like, oh, you don't want to do it that way. You want to outsource all that stuff because it's going to save you so much more money. And now that we've gotten to this point, there would be no way to run the company if we didn't actually control our own production and our own systems.
So, Michael, if I can ask a quick question, because I was actually wondering this a second ago, Mike and Kira, for both of you, and even Aaron, do you often have your landlords or your property owners put in significant TI? Mike, it sounds like you don't. It sounds like you do most of your own build out and don't ask for much tenant improvement in your locations.
Yeah,
But-
for us, since our stores are so inexpensive to build in terms of cash up front, we would rather have free rent. So the space that we're going into in Chicago is perfect for us because the building was in receivership. They're trying to sell the building, went through bankruptcy. And so they literally can't do any TI money. So it's impossible for them to recruit restaurants, but we're the first tenant moving into the space. And we have enough brand recognition that we can now kind of throw our weight around a little bit and say, well, we want, lower price per square foot and we want maximum amount of free rent. And they're going to then use us to attract other tenants. So it depends on which we're moving into, but yeah, we would rather get like free rent and less TI than TI money, but it's all kind of situational.
Yeah.
Yeah, Caroline, I'll say I've seen more, even like on a ground lease side, more guys ask for like curb in letters or maybe more TI when I hadn't seen that in the past. But also, the groups are asking for it are groups that trade at lower cap rates typically. So they're leaning into their credit to get more incentives from the landlord on these deals. As far as the strip tenants, it's sort of a case by case basis on how that individual likes to structure their deals.
Yeah, I agree with them. I think it kind of just depends on the deal and the location. Some clients are like Mike, who just would really benefit from the free rent or trying to be scrappy and do things themselves. And then there's the more chained corporate people who do need to build out in like a strip center or something. So I think it kind of just varies with the project and the goals of the client and the landlord.
Yeah, makes sense. Thanks.
Hey, one thing Mike said that I definitely appreciate is how he mentioned that I believe is, hey, he looks at multiple markets at once. And we'll have groups fly in and they'll say, hey, we're going to open up a store here on this street and we're opening you get 3 different stores going and that's a deal. And it's too tight. It doesn't work that way right now. You got to be looking at several markets at once. And then on top of that, a lot of times landlords will say, well, who are we competing with? Well, you're no longer competing down your street. You're competing with the deal in Lincoln, Omaha, and Cedar Rapids for those best terms. And I think that's something that's really come on in the last 5-10 years.
Yeah, I agree that just retail locations have become much more competitive, especially when you're in a larger MSA and you're competing with other communities. And Michael, I know you have more questions. I'm sorry, I promise.
Oh no, I appreciate it. It makes my job easier when you all
from the
want to
retail
talk amongst
side.
yourselves.
What are some things that have moved the needle one way or another for your retail clients or for you guys locations that have just helped them land in one community, which I realize it's location driven, but in one community over another? Is there anything that the community has done or contributed that's helped make a deal happen?
The only thing that we've noticed that's shifted a little bit is that in the early 2000s, a city like Des Moines or Omaha was kind of more desirable because there was this like resurgence of local shopping. And I think since COVID, that's dropped off a little bit, and that a store like Des Moines, our December traffic may never be what it was pre-COVID. And that's just because when you build up an established local market, people used to say they would come to the store 4 times a year. 3 of them would be in store and 1 online. Now it's like 2 online, maybe even 3 online and once in the store. So you're still selling the same amount of stuff, but your store traffic is down. And in a month like December, it's kind of counterintuitive, but people will say, well, it's going to be busy. I'd rather avoid the crowds and shop online. And then it means the store is actually not nearly as busy as everyone assumes it is. And you're selling more stuff online. And so college towns have kind of become more desirable again because you have this like circulating audience of 18 to 22-year-olds who are more in like in-person retail. So we used to skew more towards mid-sized Midwestern cities, and now we're kind of skewing back towards we want as many people as possible. So downtown Chicago, downtown Madison, we want as much retail nearby. A coffee shop, a restaurant, I think can kind of survive as an island because going to that is the activity. Retail has to be around other retail. You need 4 or 5 other stores right next to you within 1 block. The stores that we have that do the least amount of business are going to be the ones that are surrounded by the least amount of retail in terms of their locations. Now we can still use those locations to leverage online sales, custom printing clients. So it doesn't have to be just that store, but I think that's what you'll find is going to be tougher in bigger cities is that the expensive rent in a big city was tied to access to people, but access to people isn't what you really need for business anymore. It's like, you don't really need to be in Chicago. I mean, we probably have access to as many people in Andersonville, Chicago as we do in Davenport. So being in a big city isn't necessarily as economically beneficial as it is to outweigh, expensive rent. I don't think the like equation makes as much sense anymore.
Anybody else want to chime in on
Well,
that?
well, I will add that, when we opened the slowdown, we had several people tell us we would not be successful because we were in the wrong part of Des Moines. We didn't have a drive-through. We were on the wrong side of the road. So, and we didn't have many people around us. We had Chuck's, we had the bakery, the Mercantile just opened. But sometimes I do think it takes somebody taking a little risk and seeing, potential for the future. But some things I'd like to point out for Des Moines, Des Moines really does help business owners get going with their special investment districts. Invest DSM, could really help with commercial needs, getting people going, or neighborhood development corporations. There's lots of tax things, but like Mike said, we're way more profitable and successful now that we have other retailers around. But it's kind of fun, just there's lots of resources out there and people investing around here. So
Yeah, good insight. Thanks.
Hey, Peter, I'm curious. You've been listening in on some of this conversation about space and some of the challenges. I'm wondering what your perspectives are.
Yeah, I thought it was really interesting listening to Mike about number one, kind of they have a cost profile and they look for that as they try to enter in different markets. And then also the ability to handle some things themselves. And that probably further contributes to their cost profile and them understanding how they can open in different places. So the other thing he mentioned that I appreciate, and Aaron kind of talked about this too, Mike talked about the flexibility of, okay, maybe the store is a little bit smaller than we want to be in, but we'll make it work, right? And Aaron talked about, well, you don't have to necessarily be on this block 2 blocks over, or this street 2 streets over. It can be just as good. So I think that what, a lot of, and Kara mentioned this too with, well, we took a chance. You've got to be open to the opportunities that are present, right? And so having some flexibility, having an idea of your cost structure is going to contribute to you being successful. And without that, you can be so certain that I want to be here in this space, but sometimes it doesn't work if you don't fully understand your cost profile. And so that's what I appreciate about what I've heard so far.
Are there areas within retail that are really kind of poised for greater growth than others over the next year or two? And what are some of the challenges that maybe some other areas are facing? Aaron, because you're dealing with retailers on space, you're probably kind of on the ground floor of hearing what kind of businesses are looking at different spots. Are there areas that you're seeing greater growth than others?
I think you're going to continue to see a lot of growth in the discounters, and that's your Ross Dress for Less, your TJ Maxx, those type of brands, your dollar stores. I think with some of the dollar store closures you saw, there's a lot more to it than they just didn't meet sales. I think it had to do with the wrong profile and the wrong owners coming together kind of deal as far as the stores that were shuttered. you're going to continue to see QSR growth, food growth. I mean, people like to come together. Entertainment, you know, is the hot word. The experiential stuff. I think you're going to continue to see more and more of that as people look at ways to come together to get your kids off the iPads and come out and do family things or get together with your friends. I think that'll be the hottest growth. You know, another area that I'm seeing a ton of these stores in, which is, I think is really interesting, is the oil change places and the tire places. A lot of auto related. You know, especially with the you know, all the Tesla talk and whatnot. I mean, I suppose you still got to change your tires and whatnot, but I'm a little surprised some of the other auto services are needed, but it just shows that everyone's very bullish on, you know, I think oil and gas still. Maybe those are the main takeaways, I'll tell you.
Are there areas that you see that may be struggling a little bit more?
Well, you've seen, I think what you've seen, and we've seen this over the past several years, right? You look at, you know, you got your high-end provider, your low provider, and the guy in the middle sort of got pushed out, right? I'll look at, like, you look at your going into your Shields experience, and then you got your Dick's Sporting Goods, and then, you know, Sports Authority is sort of pushed out, right? I mean, I think you're going to see more and more of that across the board. You got to find, well, what's your value add? Are you the premium provider? Are you the discount provider? Or how do you stick out? I don't think you can't be treading water in whatever industry that you're in.
Carolyn, as you help your client cities attract retailers to their communities, are there certain types of retail that you see greater growth in or more interest in over the next year or so?
Yeah, certainly. I mean, Aaron mentioned this entertainment user concept, and you know, those come in all different shapes and sizes, but definitely communities of all sizes right now are wanting those entertainment users, just for the same exact reasons that I'm thinking with my own kids. People, especially since COVID, want places to get together, want places to come, whether it's with friends, whether it's coworkers, whether it's with family, but also you want an excuse to get your kids off their iPads and to do something. And that just kind of flows into that experiential retail component also. So definitely, you know, all communities of all shapes and sizes, whether they can support it or not, are wanting some type of entertainment or entertainment user. And then another category that I'm seeing a lot of growth or desire for in our client communities are the specialty grocers. So the Trader Joe's, the Whole Foods of the world, or even more of like a neighborhood market that just has that specialty grocer feel. So those are two other categories that I would add, in addition to the ones that Aaron mentioned, that I think we're really seeing a lot of desire for. And I do think that we're also seeing growth in all of those industries also, or sectors, I should say.
Hey, Michael, one more I want to throw in there that's more of a small shop that we're seeing tremendous growth in is, I'll say all your health and beauty services, and I'll throw fitness in there as well. It is, I'm seeing more spa type national franchise, take care of yourself concepts out there than ever before. And I think that's something that we're going to continue to see growing as everyone's looking to eat better, take care of, age well, and take care of themselves.
Right. And in addition to that, and probably on the same note of what you were thinking, the more like boutique fitness users, your Pure Bars, your Orange Theories, but every day I'm seeing some new ones pop up that I haven't even heard of before. So, and anything that's franchised also, I feel like we're seeing a lot of growth in, and have been for several years.
So for our audience, Carolyn and I had a conversation a few months ago about the trend of town center development. And there's an element of that I would like her to maybe talk about a little bit, is as communities go out and try to attract retailers to their community, they should look at what is happening in nearby communities or nearby neighborhoods to maybe get the same kind of business, but avoid the duplication of brand. And I'm wondering if, Carolyn, if you'd like to address that.
Yeah, well, you know, I think Mike said earlier, when they're looking at locations, they're looking at like 5 different communities and deciding which one or two they're going to do. Excuse me. And so, you know, a lot of retailers have rules about how close they can be and how many miles apart a store or location must be and that sort of thing. And so, you know, if you're competing communities and you really want a Lululemon or whatever it may be, but there's one 5 or 10 miles away, don't look at Lululemon, go to Alo Yoga, go to Vuori, go to Athleta, look for some of these others. But really, I think that co-tenancy, like Mike was saying earlier, also is really key. And so look at what retailers, when you're developing a town center, or if you have just a shopping center or anything like that, or just a vacancy in a center, look at co-tenancy and look at what retailers typically like to locate near the retail that you've got or the retail that you're looking to attract. And then I think that's really a starting point for driving retail to your community is what fits this development, what fits this downtown, what fits this city center, and what retailers typically like to locate in those types of places. And then who do they typically like to co-locate with? And I think that's a good starting point for deciding what retailers to commute to your community, your development, or whatever it may be.
All right. Mike, I'd like to jump back to you for a couple of moments. You've talked about, and I believe the term is omni-channel marketing, and how Raygun really looks at that and has developed that part of their business, and how important that is for a business's success. Can you talk about that and how Raygun has used that to really, boost business and maintain its presence and be successful?
Yeah, it's tricky because online retail and in-store retail are kind of two different experiences, and that the customer wants a different experience from each. Long story short, a store, you're comfortable wandering around in and finding things. A website, you want to go in and out as fast as humanly possible. And so it can be tough to do both well because it's one product, but set up different ways. And so we've tried to take cues from the internet for like our physical stores, in that, our front display we refer to as the newsstand, and it should be the homepage of the web of the store. And it's not done by season, it's done by whatever is new. So it's a hodgepodge of topics, but it's meant to be that way. And in terms of how we lay out things, it's kind of based off of how somebody like shops via a screen. You'll notice it when you're in our store and you see all the cubes with images of the shirts that are in the cubes, because people they don't have enough time to actually look at a physical product anymore. They just want to look at a picture of a product next to a product. But that's how your brains have been wired to do it. And so you kind of have to recognize this is how people are, meet them in the middle. This whole but it used to be this way. It's like, yeah, but good luck. It's like grab a Walkman and a cassette tape and see how that works. There may be a couple of them out there. I did see somebody with a Walkman the other day, but we were all like, what is the point? 50 minutes of music, huh? And that's it all day. Unless you got a backpack. And so it's hard because you have to do kind of like both of them well. I will say, to the city development standpoint, I think cities underestimate how much setting up streets and sidewalks properly will make a difference in the retailers. So I think that the lines have been blurred to, developers can't do anything without a city and then the developers get mad because the city wants input, but it's like, well, they're only giving input because you're there with like your hat out asking for money. And then it's who is staying in what lane. And cities, I think, don't really realize the importance of setting up streets properly and setting up neighborhoods properly and what big of a difference it makes. So I think sometimes if you kind of got back to the city doing what the city is supposed to do and doing it well, I've been around and around with like the city of Des Moines over the last 20 years on things. There's a four-way stop out here that took me literally 7 years to get. And the city spent $30,000 avoiding putting in a four-way stop. It is one of those insane things that you're like, wait, it would be easier for me to get $30,000 personally from the city of Des Moines than to have them put a stop sign in for the neighborhood good. So I think it's realizing what kind of lanes you're in is good. And I think cities should focus on creating neighborhoods and letting businesses fill in.
All right. Very good. I'd like to kind of bring you all in on a question as we begin to kind of watch the clock here a little bit. Kind of playing off our opening question today, as far as opportunities, I'd like to go around here and ask each of you to kind of give us your best forecast for the retail sector and factors that you see as playing into that forecast that you're going to give. Carol, let's start with you.
Oh, I was hoping to go last. I think kind of just what we've all been talking about. I think the growth is going to look different with, the costs of building materials, insurance rates, all the things that go into buildings. So a lot more second gen spaces and just redevelopment in the city of Des Moines as people are laying things out. And hopefully we can continue to have a good mix of local, regional, national businesses coming together. Urbandale has that really interesting project they're doing, like kind of building that town center. And I think people are craving more of that, a place they can go shopping for an afternoon or hang out or have experiences like other people have talked about. So I think even though there's a lot of challenges, I think we're kind of at an exciting time of creativity and growth in the metro.
And Peter, what is your kind of outlook for the next year?
Yeah, I think probably my view might be a little bit more broad, right? As I think about retail in general, I think that there is going to be an opportunity coming up where some retailers are going to figure out the tariff and the supply chain implications maybe before others, and it's going to be how do they take advantage of that opportunity? And so that might be an ability to grab market share. Potentially, it's an ability to recapture margin, and so maybe those higher prices might stay around a little bit longer. But I think the opportunities for retail will all be about delivering customer value. And I know we talked about this yesterday in our preview, but the retailers that deliver customer value, they're going to be the winners. And so it's not just a race to the cheapest price. It's not finding the cheapest supply. It's about finding the way to connect with customers in a way that delivers value to them. And I think those are going to be the retailers. And it doesn't matter if it's a national brand or a local shop. The ones who deliver the value, they're going to be the ones that are the big winners coming up.
And Mike.
Yeah, I think the same thing. It's whenever there's, chaos, you can move into that space. I'm kind of interested to see what'll happen with this like next generation of people coming up. It's one thing to attract businesses and then it's another thing to create businesses. When I was in one of my first East Village meetings in 2006, somebody said, well, what we need is like a big anchor tenant, like one tenant on a corner that's a big retailer that's going to attract people. And like little did they know, the anchor tenant was like sitting in that room. I was just running a 1,300 square foot store, but in 10 years would occupy like a 7,000 square foot store that subleases to a bookstore and a coffee shop. And the city didn't have to spend any money to attract me. Got nothing from them. I just grew up through the community, and they spent years swinging and missing on these, anchor tenants that were gonna, save the neighborhood. When in reality, it was, deepening our own bench. So I'm less interested in, national brands moving to Des Moines because we're never going to get, we're the major league of the minor league. We're always going to get the second, third run national brands. Nobody's going to be like, oh my God, you got that one. I've only seen that one 8 times in other cities. The thing that's going to make Des Moines interesting is growing our own crop of businesses. And I'm interested to see these kids who have grown up in a totally digital world but crave physical space, what is going to be interesting to them, because it's going to be different from what we've been doing in the past. And there's only kind of one way to find out, which is give them the opportunity to like maneuver. So I hope Des Moines as a city recognizes that the anchor stores and the people that are going to save retail in Des Moines are in Des Moines already. They're just not in retail. And how do you build a system that capitalizes on that versus a system that just kind of, gets the trickle down of other cities' economic like creations.
All right. And Aaron, give us a quick forecast for the next year.
Yeah, I mean, and generally speaking, just from a broad retail real estate perspective, I think it's going to keep trucking along. I mean, for us, the biggest challenge is the lack of sites, of space. And I think, and I don't see that stopping anytime soon. At 3.7% vacancy rate, it makes some deals challenging. So we have a resilient, I think we have a resilient consumer here in the U.S. And I don't want to say we're getting used to chaos, but it seems like there's a new issue every year or every 6 months or every month. And I think, the consumer and the business owners got more and more used to fighting through these headwinds. So I think I foresee, and what our numbers are showing us, is we're going to end up having a strong year this year on retail leasing and sales. And I think it's going to continue here for the foreseeable future.
And Carolyn, let's wrap it up. And what's your forecast?
Thanks. And before we wrap up, thank you also for letting me be a panelist. I've really, really enjoyed the conversation and hearing thoughts from each of you. But, you know, a couple of things. One thing that I think that we're going to see a lot more of in 2025, as we've talked about construction costs and things like that, I think we're going to see more redevelopment as opposed to new development and new build. We're seeing a lot of developers even contact us and ask us what communities we're working in certain regions and saying, hey, are there any blighted shopping centers? Are there any opportunities for redevelopment? Who would the retailers be that would be interested if there were a great space? And so we're seeing some of these spaces really be turned over to create some real Class A space for retail. And then the other thing that I think that we're seeing more of just in the last few years and continuing to see in 2025 are some downtown redevelopments whether it's downtown streetscaping improvements, creating downtown neighborhoods, trying to recreate that 1950s feel of those traditional retail downtown centers where it was just more of a destination retail center with retail, restaurants, so on and so forth. And so we're seeing a lot of downtown redevelopment too. And I think that we're going to continue to see that. And it's really, really interesting to see the local and the regional and the small businesses that are going into those downtown centers, as well as the national retailers that are starting to really notice downtowns also.
All right, I appreciate it. We're just about out of time, and we'd like to offer our panelists an opportunity to give a quick final thought. But before we do that, I'm going to send it back over to Chris for some important reminders and about things that we're doing at the Business Record and upcoming events.
All right. As you guys think about your final response to one final takeaway, a couple things we want to let you know about. In April, Michael was hard at work putting together our annual real estate magazine. We'd love for you to check that out. You can find that at businessrecord.com/annual real estate magazine. Members of the Business Record got that in their April edition of the Business Record. If you're not already a member and you're interested in getting a copy, feel free to reach out our way. You can get that information at businessrecord.com/AREM. And of course, if you don't already get the Commercial Real Estate Weekly, Michael works hard each and every week on Wednesday. It's a free e-newsletter, great way to stay up to date with all the latest trends in real estate and development here in the market. You can sign up at businessrecord.com/sign up. And of course, we've got a number of other events. If you enjoyed today's program, we've got a number of things coming up. We'll have a Fearless Focus on June 19th. On July 10th, we're going to be taking a look at Innovation Iowa here in the state. And then on July 31st, we'll have Women of Influence, which is our annual event to feature some of the top women here in the community. And then our next Project 515, our second of the third in the series, will be on office space, and that is going to be on August 15th. All right, final question. We'll go ahead and go around the horn. Carrie, you've had to go first a whole bunch of times, so I'm going to let you have the last word today. And Caroline, we'll have you go first then.
Yeah, well, as I said, thank you again for having me. We really enjoyed it. Thanks for letting us share some insight and some thoughts. We are coming off, or our office, the retail coach, is coming off of ICSC Las Vegas last week. And so very timely conversation on the state of retail for sure. And we would love the opportunity to work with any of the communities in the region to recruit retail on your behalf and partner with your city as an extension of your team. So reach out if that's something that you're interested in. And thanks again to each of the panelists for a really insightful conversation. I really enjoyed it.
Great. Aaron.
Yeah, I'd say thanks again as well. And, you know, I think I'll just echo what I previously said. I think while we're mindful of what's going on, I think we'll still see continued retail to forge ahead and have a strong year this year.
All right, Mike.
Yeah, I guess this day in history 25 years ago, I started as an intern at CityView when it was owned by BBC. So my desk would have been right down from where Chris is as like a 17-year-old high schooler. So anybody out there on this call, keep an eye on the interns. You never know what you will be inviting them to in 25 years.
All right, Peter.
Again, thank you for having us today. This was a great conversation. You know, one of the things that I think about when we talk about retail is that we have a resilient consumer. I think that's great. I kind of agree with Aaron. I think we might be poised for big things. I think consistency of supply is going to be interesting because I think retailers are going to look for different producers potentially for their goods. And so just are they going to receive that consistent product quality? I think that will affect some retailers and hopefully can find some success for some new ones. So there we go.
All right, and Kara, wrap us up.
Yeah, I just, I'm so thankful to be included today with this group of people. It's just so encouraging to me to be able to interact with so many people who are excited and passionate about the development in Des Moines. And, just a little note to everyone, keep supporting your small businesses, and even if it's a chain, there's a lot of stuff happening on the supply chain side and changes. So, I know everybody can't do it all the time, but support those ones you love. And I'm excited to see this next year in Des Moines.
Well, thank you all to panelists for your insights today. As we dove into the retail industry as well. As a reminder, Project 515 is free and available to the community thanks to the support of today's sponsors, Midwest One Bank and Iowa Finance Authority. If your company is interested in participating in this, feel free to reach out our way to help support things like this. I want to give a big thank you to Michael Crum for putting together today's panels. He's going to be hard at work taking the takeaways from today's event, putting that in our e-newsletter, also in the business record as well, and using the insights from today to continue reporting about real estate and development. And of course, got to give a big thank you to our panelists. Thank you for your time and your insights, for going out on a limb today and helping project a little bit into the future about what we might expect in the retail industry going forward. You can't hear the applause, but of course, we know that that's coming your way. So thank you for giving your time and energy for helping make the community better as well. I've been saying this at the end of all of our events recently. There's so many things going on. We could talk about all the bad things happening in retail, the challenges and the things that are happening. You've seen it today. These folks are all working hard and making good news every day. So the way I've been closing out events is saying, go make some good news for the community. That's always the stuff that we like to report on to begin with. So make some good news. Thank you for being here today. And hopefully we'll see you again here soon.